Now, what is important about accounting equation? We should understand that accounting equation, it is the backbone of the double entry or bookkeeping system. It ensures that every transaction is recorded in a way that maintains the balance in the business financial records. Remember now, on the accounting equation, we are looking at the analysis of the transaction. We analyze the transaction. We have the basic accounting equation. This is the simplest basic accounting equation that we have. We are saying assets of the business must be equal to owner's equity plus liability. Now we define what is asset. Learners, this one, it is most important. You need to know what are the assets, owner's equity, and liabilities. Remember, they will help you when you deal with accounting equation. Also, they will help you when you deal with the general ledger. On the general ledger, it is when you are preparing now for financial statements. You need to balance your accounts. Now, what are the assets? When we talk about the assets, we are referring to anything that owed by the business that has economic value, such as cash, inventory, and equipment. Then we have owner's equity. The owner's equity is the owner's financial interest in the business. It's calculated as the difference between the business asset and the liability. We are looking at the difference between the business asset and the liability. Now, the last one, it is the liabilities. On the liabilities, we are referring to the debt or the financial obligation that a business owes to others, such as loans and accounts payables. But now, when we talk about grade 8 accounting equation, we focus on the asset and owner's equity. Asset and the owner's equity. You'll see all the transactions that we are having. They talk about asset and the owner's equity. Learners, this one, it is important again. When you are analyzing the transactions on the accounting equation, there are questions that you need to consider before analyzing the transaction. Each and every transaction, it has two or more accounts on it. They affect two or more accounts. Now, in grade 8, we are talking only about 2 accounts. But now, when you talk about more accounts, you'll see them when you deal with grade 9. Now, in grade 8, our focus, it is on the services business. Now, in grade 9, we are talking about the trading businesses. Now, after identifying 2 accounts that will be affected by the transaction, you move now to a second step, whereby you ask yourself, are they assets, owner's equity, or liabilities accounts? Now, I've said in grade 8, we focus on the asset and the owner's equity. We focus on the asset and the owner's equity. Now, the last question that you need to ask yourself is that whether they increase or decrease. They increases assets or decreases assets. They increases owner's equity or decreases owner's equity. Now, let us look at those accounts that are affecting our accounting equation. Now we move to the next slide. On the next slide, we'll be looking at the CRJ and the CPJ. Now we are saying we have cash receipt general transactions and the cash payment transactions. Remember, on the cash receipts transactions, we're talking about amount of money received by the business and deposited into bank account of the business. Now, on the cash payment journal, in the same way we receive the cash in transactions, we also pay cash in transactions via electronic fund transfer. Now, on the cash payment, we are paying. On the cash receipts, we are receiving money. Now, moving to the next slide, we are looking at the classification of accounts. Reading the transaction, you need to identify accounts that are affected by the transaction. Now, under assets, we have the tangible assets and the current assets. Now, under tangible assets, we are talking about land and building, equipment, vehicle. Those are the tangible assets, are the fixed assets. We are referring to the assets that they last for a long period of time in the business. Now, we have current assets, which is bank, cash float, and petty cash. Remember, these are the short-term assets. Classification of accounts under owner's equity. Under owner's equity, we have drawings, we have expenses, we have capital, and the income. Now, drawings, remember, it is withdrawal of money by the owner from the business account. Now the capital, it is the contribution of money by the owner in the business account. Now we have the expenses. We say all the expenses, they have a negative impact on the owner's equity. It means they decreases owner's equity. Now incomes, they increases owner's equity. All the incomes increases owner's equity. I know that we have dealt with this in the first term. Now it's just a reminder to you learners that our current income, rent income, commission income, and donation, they have a positive effect on the capital. They increases the capital. Now all the expenses, for example, rent expense, water and electricity, repairs, telephone, they decreases the owner's equity. Now they have a negative impact on the owner's equity. Now moving to the transactions, analysis of the transaction. Now we analyze the transactions. The first one, let us look at the first one on the 5th of this month. The owner, Jay Chen, deposited 100,000 as the capital or as his capital contribution. Receipt number 001 was issued. Now, when we analyze these transactions, we are using this table, learners, which shows journal, source document, assets, owner's equity. We have effect reason under owner's equity and the assets. Now we are saying when we analyze this transaction, the first one we are going to look, it is the journal. The journal will be the CRJ, then the source document, it will be the receipt. It will be the receipt. Now, when coming to the assets, we are saying what will happen with the assets here? Remember now, the owner has contributed the money in the business account or to the business. Then this 100,000, it won't be stored in the business premises, but it will be taken to the bank account of the business. The effect, it will be plus 100,000 under assets. Then the reason will be the bank increases. It means the business has received money. Therefore, the bank account of the business will increase. Now we come to the owner's equity. The other account that is affected here, it will be the capital. This capital shows that the owner now has a stake in his business, which we refer to it as the capital. We are saying owner's equity will also increase because of what? Because of the owner's capital contribution. There isn't to be owner's capital contribution. It means the capital, it also has a positive effect on the owner's equity. Moving to the second transaction, on the 7th of this month, cash received for services rendered 12,500. Now the business has rendered the service to the airlines. They received 12,500. What will happen with this amount of money? We are saying, let us identify accounts that are affected. The first account that will be affected to be cash. It means it will be bank. The business has received money. When the bank increases, it means assets will increase. Then it was for what? Services rendered. Remember, in term 2, when we're talking about the CRJ, we say now we are having the current income. When you render the service, it is the current income. The two accounts that will be affected to be the bank and the current income. Let us analyze it. The general will be the CRJ, source document, cash register, then the amount under the assets will increase by 12,500. The reason being bank increases. Then we move to the owner's equity. It will be 12,500. Then the reason being the current income. It will be the current income. Now the last one under the cash receipts transaction. Received the monthly rent from a tenant, Jason. Then let us identify the two accounts that are affected. The two accounts that are affected to be, the first one, it will be bank because you are receiving money. Then the second one, it will be the rent. Remember, this rent, it shows that the business has received money from the tenant. Then it will be the amount of rent. It will be the rent income. Now let us analyze the transaction. It will be CRJ, then the receipt. It will be the source document. Then under the assets, you say bank will increase by 6,500. Then it will be bank increases. Then under owner's equity, it will be plus 6,500 rent increases. Now, when you go back to our simple form of accounting equation or simplest equation that we are using for accounting equation, we say assets are equal to owner's equity plus liabilities. Now, when you look from the first transaction up to the last transaction, you can see the right-hand side is equal to left-hand side. It is what you must do always when you analyze the transactions. Then again, the last one under CRJ that you need to be aware of it is that always when you receive money, bank increases the assets. Bank increases the assets. And again, assets will be having the positive effect. It means assets will be increasing because of the amount of money that you are receiving. Now, let us move to the last one, which is the CRJ. We look at the CRJ. On the CRJ, we are saying now here, on the CRJ, cash payment journal. Let us look at the cash payment journal. On the cash payment journal, I'm really sorry here, it's a mistake. Bought consumable stores for 450 from Macro and paid by EFT. Then when you buy goods, it means the money from the bank account will decrease. Two accounts that will be affected, it will be bank, and the second one it will be consumable stores. What will happen with the bank? Bank will decreases, then consumable stores will also decreases by 450. Then owner's equity will decrease and also assets will decrease. On the second transaction, paid the weekly wages with cash 3,200. What will happen here again? We say assets 3,200, bank decreases, and 3,200 wages has a negative impact on the owner's equity. Therefore, owner's equity will decrease by 3,200. On the last transaction, bought a printer from Game for 2,900 and paid by electronic transfer, EFT, number 2. What will happen? Two accounts that will be affected, it will be equipment and the bank. Bank will decrease the assets, and again, equipment will increase the assets. It will be plus 2,900 of equipment minus 2,900 of bank. Therefore, the effect under owner's equity will be 0. Then when you calculate again under the assets, it will be 0. Then this it was a lesson for today. Thank you very much. I'm done that. Thank you, my brother. All right, Thank you.